This Metro Detroit is your December 2021 financial and real estate update. We are going to cover some shifts that are happening in the market. We can see it in the stock market as well. We're going to cover the Omicron virus, whatever the virus is called. We're going to cover the recent renomination of Jerome Powell. We're going to cover, of course, the Metro Detroit and the national real estate market. And watch till the end because I'm going to have one financial tip that you have to take advantage of now that could save your family thousands in 2022, 2023, and 2024. Now, before we dive in, this video, we're going to support the Capuchin Soup Kitchen, which has been around serving residents of Metro Detroit that are in need since 1929. So for every like and every comment and every subscribe this specific video earns, we'll be donating 10 cents for each one of those three up to $1,000 to Capuchin. And they need it, guys, especially this time of year when it's cold out. People need a warm place to get a great meal to help them just get back on their feet. Every little bit helps. Thank you so much. On with the show. Jerome Powell's been renominated, and this is a thing that we know. But what does this actually mean? Well, we're finding out right now that he is looking to taper the bond buys, which is going to have the effect of increasing interest rates over the next 6 months. We're anticipating the interest rates are going to hit 3.5% to 4% by June of 2022. What this also means is if you're sitting at a 3.5% or higher, this is what it means to you guys, 3.5% or higher mortgage right now, as far as your interest rate goes, you need to get in contact with a great loan officer to get that refinance, bring that payment down, because this is going to be one of your last opportunities. I also know this because back on Tuesday, November 30th, we saw the stock market get absolutely rattled, dropping as much as 2% by mid-trade day, although it did rebound up to a 1.5 loss. It shored up a little bit towards the end of the day for two reasons. One, the Omicron virus is scaring the heck out of the stocks. Just like with the last COVID, we saw stocks just crumble and plummet. We're not seeing it this time, which is good. I think the stock market, I think investors have gotten a little used to the COVID releases between the Delta variant and the other variants. So we're definitely seeing a tampering of that right now. But with that news that hit Friday the 26th, coupled with more Omicron news on Tuesday the 30th, plus Jerome Powell recommitting to tapering on the bond buys, which caused a massive tumble. Now, what this means to me is when I see something like this, I usually dive headlong straight into the market. So how I treated that with my own personal finances is on that Friday and on that Tuesday, I bought the dip. Seth Godin, Warren Buffett, several other financial gurus would advise, hey, when everybody's running in one direction and stocks are tumbling, that's the time that you want to jump in because it's like having a Black Friday sale, which is exactly what happened on stocks that Friday directly after Thanksgiving. It's a great time to get in there and invest. And even if you invested at a higher price originally, dollar cost averaging is going to bring that cost per stock per share down when you average it all together. Because one thing I do know at the end of the day is over the short term, we may lose a little bit, we may gain a little bit, but in any given 10-year period, the stock market has gone up 100% of the time. That's not individual stocks, everybody. That is the big basket of stocks, which again, mutual funds, S&P funds, Russell 5000 index funds are the safe play at this time. Next up, we've got inflation. Still way high, still sucks. And that's all I got on inflation. No new news. Next up, I do want to touch on the new Omicron variant of the COVID-19 virus, right? So we saw the COVID-19 virus, we saw Delta, which Delta hit people a lot harder health-wise. Omicron is a lot more contagious. So this is where the difference is coming in, at least with the early reports out of the CDC, as well as some other medical institutions. What we're seeing is Omicron can pass a lot faster, but is not necessarily more deadly than the original COVID-19 strain or variant. And I think we're actually in a better position than what we think. And unfortunately, the stock market's taken the brunt of it just right here in early December and the end of November. But I think we actually are in a better position to combat this rapidly instead of it taking months and months and months and months. One thing I always want to touch on, especially this time of year, of course, is the holiday spending, because holiday spending is a significant indicator of where we're going to go with both the GDP, not only in 2021, but 2022, because it's showing the discretionary income that people have, but it shows the strength of employment extending into next year. And favorable market conditions there. So we are currently up here at the beginning of December, 4.4% in holiday spending over last year. And Black Friday sold 7.5% more, or there were 7.5% more dollars spent on Black Friday than 2019 before COVID had come out and before all those lockdowns happened. What does this mean? This means that Americans have money to spend and they are going to spend it, and they're going to spend it during those holidays. Unfortunately, this is also part of what is pushing inflation and making the supply chain issues worse, but I do think that we're going to see that start easing towards the end of the first quarter, and we're going to see inflation start receding, especially if Jerome Powell does tick up the interest rates a quarter or a half a point, as he's kind of planning on doing right around that time. I do like to see strong holiday spending because it means that there is confidence in the market, even if people are kind of, mad at the market for getting so expensive. Last but not least, we've got home sales, right? It's what we're here for. We're real estate agents. It's what we do. It's what we love. And it's the information I love to bring to you. And as always, if you have a need coming up, or you have a family member or a friend that has a need looking for a home or looking to get a home on the market, call us. We are negotiation experts. We are some of the best in Southeast Michigan, and we would love to take care of your family as if they're our family. Give us a call. Going forward, so we have a very strong November closing month. We have 11,450 homes in Metro Detroit that is sold. Looking at the Case-Shiller Index, we're seeing our November year over year for the last 3 years actually in an upward trend, coming out of COVID especially, but in an upward trend as millennials are just in the market and buying what they can. And here's the fear. Talking with a lot of buyers right now, a lot of them are afraid of being outpriced or priced out of the market in 2022 and a half or 2023. So there's a lot of concern here that the market's going to continue going up rapidly. However, again, looking at the Case-Shiller numbers coming out of last month, that is not the case. So appreciation on a nationwide and a local level has started slowing. And the reason why I can tell that just by simple numbers in Metro Detroit is we also saw 12,239 homes go on the market and a little bit shy of 11,000 homes go pending. So right now we're seeing our inventory levels continue to rise a little bit at a time, right? So it's provided some much needed relief for our home buyers out there. What that also means is if you're in an FHA position or if you're a veteran and you want to use your veteran certificate, now is the time, today is the day, because we do have properties that are on the market, and our average market time here in Metro Detroit has extended up to about 27 days. It's the highest it's been all year. Now, the moment you've been waiting for, you waited all the way to the end of this video to get the one tip that could save you thousands. The one thing that I am going to tell you right now that you need to be focused on over the next 30 days is calling every one of your credit card companies and negotiating a lower credit card rate. A lot of people don't know that you can do this, but you can. And I put a link to an article in the description below. Use that 4-step process. It's very good. And so what you do essentially is pretty simple. Call your credit card company and say, hey, I want a lower interest rate. Start with, what is my APR right now? And they'll tell you 19.9, 14.9, 22.9, whatever that might be. And say, great, I want to knock 10 points off it. And go for 10 and let them backpedal you to 5. Right? Then wait till the next month, call them and do it again. And you probably won't get all 5 that second time around, but you might get 1 or 2. You might get 1 or 2, and every little bit matters. Now, it's always my opinion that you should pay off your credit card in full every month. And the reason for this is because my highest and greatest use of credit cards is frankly the points. Who doesn't love the points? And I have an entire video that goes over the different credit card point styles, which ones are the best ones on the market at the moment, and that's a video that I'm putting out every 6 months to keep people on top of which credit cards are actually the best fit credit cards for their family. So Visa, and the way it works is Visa, MasterCard, Discover, American Express, they all charge service fees to the vendor, right? So when you eat at a restaurant, they're paying 4, 5, 6, 7% every time you swipe that card. The credit card companies are coming back and saying, hey, use my card, use my card, use my card, get 2% cash back, get 5% towards travel, get this, get this, get this, right? Definitely worth taking advantage of because those little dollars can really add up quickly, especially if you're like me and you're getting an Amazon package at your house pretty much every darn day. There is an Amazon card that gives you 5% back. So at least deadens the blow a little bit. And if you only have one credit card, another thing I would advise is having 3, looking really hard at which credit cards could benefit your family the most and expanding that up to 3, because with those 3 trade lines, your credit score will actually go up over time, and only with 3 or more trade lines can you actually hit a true 800 credit score. And that will be talked about in another video that I'm putting out shortly on everything you need to do to achieve an 800 credit score for free. It will take time, but for free. Thank you again, everybody, for tuning in. This is your Metro Detroit December real estate update. Don't forget to like, comment, share, subscribe, all of it. And for each one of those items, we'll be donating 10 cents to the Capuchin Soup Kitchen. And as always, we would love to be your real estate resource here in Southeast Michigan. If you're looking to purchase or looking to sell, it would be an honor to serve you and your family. Have a great rest of the year.